Hi everyone, welcome back to my commerce class. Today we are going to work out a problem on leverages. In the previous video, I gave the introduction about the leverage, the meaning and different types of leverages. And today we are going to work out a simple problem on leverages. Okay, so here I have taken a first illustration, a simple illustration, and let us apply the three kinds of leverages to find the answer for the same. Okay, from the given information, calculate financial leverage, operating leverage and combined leverage. All the three leverages to be calculated. Sales given. What is the sales? Sales 10,000 units at rupees 25 per unit. Variable cost rupees 50 per unit. Fixed cost, the total amount is 3 lakhs. Interest on debt rupees 1,50,000. This is the information available. Very simple problem, and we have to prepare a statement. We call it as an income statement, which gives the information of contribution, EBIT, EBT and all, and that is to be prepared first. Okay, let's work out this statement. Income statement to calculate leverages. So first we have to take sales. Okay, 10,000 units sold at rupees 250 per unit. Okay, so 250 per unit. So 10,000 into 250, it becomes 25 lakhs. And minus variable cost, that is rupees 50 per unit. It's given in the problem. Look at your variable cost, rupees 50 per unit. Okay. Let's take your variable cost rupees 50 per unit. 10,000 into 50, 5 lakhs. And 25 lakhs minus 5 lakhs, we will get a contribution of 20 lakhs. This is called contribution. Then we have to subtract fixed cost. It is given in the problem. That is amount of rupees 3 lakhs. So 3 lakhs taken here. Okay. So 20 lakhs minus 3 lakhs, it becomes 17 lakhs. Clear? So 70 lakhs. Later we have to subtract the interest on debentures, interest on bank loan. So what is the interest on debt? That's 1,50,000. 1,50,000. So that will get a 15,50,000, which is called EBT, earnings before tax. Based on this information, we need to apply the equations for three kinds of leverages. First, I'll take financial leverage, EBIT divided by EBT. What is the value of EBIT available? 17 lakhs. Okay, so 17 lakhs divided by EBT. What is the amount of EBT? 15 lakhs 50,000. So 17 lakhs divided by 15 lakh 50,000. Do it in Calci so that you will get 1.09 times. We call it, we represent it in times, not percentage. It is to be represented in times. 1.09 times. Okay. And then we are going to find out the operating leverage. So this is the equation. We discussed all these things in the previous video. Once you go through that for clear understanding, contribution divided by EBIT. This is the equation for operating leverage. According to this equation, what is the contribution? 20 lakhs. This is the contribution. Okay, 20 lakhs divided by 20 lakhs divided by 17. EBIT is the 17 lakhs. Okay, 20 lakhs divided by 17 lakhs. Use the Calci so that you will get 1.17 times. 1.17 times. Then we are going to find combined leverage. So combined leverage can be calculated by this equation. That is a financial leverage multiplied by the operating leverage, or you can go for the contribution divided by EBT. So we know that contribution is 20 lakhs divided by EBT. What is the amount of EBT? 15 lakhs 50,000. Okay, so when you divide the 20 lakhs by 15 lakhs 50,000, you will get 1.29 times. Okay, so it is to be represented in times only. So it can also be calculated by this equation, that's a FL into OL. What's the financial leverage value you got? Financial leverage is 1.09. Okay, 1.09 into, so what is the operating leverage? That's 1.17. For that also you will get 1.29 times. Even if you multiply it also, you will get the same value. Okay, so like this we have to find out a financial leverage, operating leverage and combined leverage by using this equation. You have to remember these equations. Okay, so financial leverage is the relation which represents between the EBIT and EBT. Operating leverage is the relation between contribution and EBIT, that equation to be applied. And for combined leverage, contribution divided by EBT. You have to remember this equation. Okay, before applying the equation, you must understand how to prepare the income statement. It's a common statement for finding the contribution, EBIT and EBT. So the information may differ, but depending on the available information, you have to make it clear. So sales minus variable cost is equal to contribution minus fixed cost becomes operating profit, that is EBIT, minus interest, you will get a EBT. Okay, based on this, you have to apply the equation and find the answer. Okay, if you like this video, like, share and subscribe. See you in the next video.